Hello ladies and gentlemen, this is Dan O'Brien with Prosper Trading Academy. Today is Wednesday the 16th of January for my latest video that we'll talk about what we see on the screen here and a little bit more trade that we're in right now. But before we get started, of course, I have to share with you that stocks and options trading involves substantial risk of loss and is not suitable for every investor. The valuation of stocks and options may fluctuate, and as a result, clients may lose more than their original investment. All trading strategies are used at your own risk. Okay, so we talked about this chart that we see here just 2 days ago. And I had mentioned that normally I will not look at a very steep trend line unless something odd is happening, and I explained that Monday. The gap opened lower on Thursday and Friday and Monday, all three of those being followed by strong rallies. Whether they close positive or not is irrelevant, but the lower prices were being rejected and not accepted. So that for whatever reason, there was no follow through, and those prices were again rejected, and therefore it led me to believe that this extremely steep trend line would hold and take us up to at least the higher end of my range, which is around 2630. Now, as you can see here, as I'm recording this, we are at the high or very close to the high of the day. There is almost no selling in the market, and what little selling there is being absorbed by the limit buyers who seem to be suddenly everywhere. And therefore the market could go a little bit higher. Now, there's still 30 minutes to go in the day as I'm recording this, so there could be a quick sell-off at the end of the day, although at the moment it looks very unlikely. So follow-through can definitely bleed through any area of support or any area of resistance, as a trend, or once a trend gets going, it can very often get a little overheated in either direction. In this case, definitely up. Remember, we're coming from this green ellipse down here of 23.16, and we've gone straight up to 26.23. That's over 300 points higher. I mean, that's straight up 300 points. That's amazing. So 26.50 is not out of the realm of possibility, and a few times I've mentioned if it really gets nuts, we might go up and test that 200 day moving average, the thick purple trend line moving average that you see on the screen. Now, I am not expecting the latter with the 200-day moving average, but when it gets going to the downside, you're usually closer to the bottom than you are when the market's rallying closer to a top. What I mean by that is that there's always a reason that the market is oversold to the downside, and it'll turn around and come up. When analysts change their guidance, they change everything to make it seem like, well, the market will turn around and go up. But when it's going higher, they'll do just the opposite. They'll change everything to make it sound like it'll go even higher still. Like from 2008 to 2018, 10 years of a straight-up bull market. But that's just the way it works. That's normal. You should be used to that by now. At any rate, we are... if the market is going to act rationally, at least to a certain degree, we've got to be fairly close to a high here. And therefore, I had recommended a few extreme short trades, and one of them here is Darden Restaurant. And so in the room, we recommended Darden. It was a sell near the top of the channel here for various reasons that we talked about in the momentum trading room. And we can see here that the market has come up near the highs, and we shorted it up here. Some people above 107, some people right around 107, and we're looking for the market to move back down to the $100 range or even lower if we do in fact get the weakness in the S&P 500. So there's a particular trade that we're on right now. Again, hasn't even moved very much. The stop would be over this high above 108.20. And so based on the overall market, as I've said a million times, then we're going to look at whittle it down to individual names. And on this one in particular, we're looking at Darden Restaurants. Last earnings report was bad. Looks like it's overbought. And for technical reasons, again, that was explained in the room, we got short the other day. And so we're looking for this pullback. And as I'm talking, the S&P suddenly just dropped 5 points. Now, in the general or the grand scheme of things, 5 points is nothing. But hey, 5 points in a couple of seconds, not too bad. So maybe it's getting started. All right, everyone, have a great evening, and I'll do another video for you on Friday to wrap up the week. Take care, and as always, trade well.